All right. Well, we are live, officially broadcasting only on onedealaway.com. This is Money Matters. My name is Nev, and today, boy, do we have an episode. It is a very exciting, very juicy, very interesting episode when we're talking about real estate. As you know, it's one of my favorite topics to talk about, and we have quite a bit of news and information to discuss. One of those pieces is, what's happening with the commercial, what's happening with residential, where are people moving, what is the inventory. All of those things, while they appear to be potentially boring, right? Because we're not talking about these like earth shattering, 5x days that we see in crypto, for example, or, giant whatever, everything is sort of waning off, and, stock market and that kind of stuff. We do get to see a bit of where are we right now and where are we potentially going. The beautiful piece about real estate is that it is slow moving. That was one too many ises happening here right now, but that is the truth. It is very slow moving market, and that means that we have time and space and ability to adjust to where we're going, where we're heading. And while nobody can predict with 100% guarantee of this is how things are going to roll out, it does give us a unique insight into what is possible and what is a potential. And that is what we want to create here on Money Matters, to really start planning in advance of how do I position myself for what I think is coming. So when we talk about commercial and office market, there's news information about that. It gives us plenty of runway if that is something that you want to do. We're looking at some of the hottest markets and what's happening there. And even though they're kind of hottest right now, it doesn't mean that they're going to stop being hot. It's not like a stock where everybody piles on today and then tomorrow everybody dumps, and by the time you join, it's done and over with. It gives us runway, and that is what we want to do. So hopefully you're excited. I am excited to see everybody who is watching this live on onedealaway.com/live. Welcome. Good morning. Make sure you sign in, say hello, and we're going to do Q&A at the end of the session. As always, for everybody else watching this on YouTube or on Facebook, feel free to leave the comments over below the videos, right? And also do me a huge favor, share these videos, hit the like button, and subscribe to the channel, subscribe to what's going on, hit the bell if you're on the YouTube, you get notified when we go live, and invite others to come watch and join it. Of course, only if you're liking. If you're not, well, I guess don't do any of those things, and just find somebody else and something else to watch. All right, y'all, let's do this. Whoa, 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 sorry about that. Here we go. And now we press the button to change the screen, Nev. So, good morning, and sorry about that. Clearly, I just need to keep my hands to myself while I'm trying to get something else to be rolling. Otherwise, I might get myself into a host of trouble. So, hopefully, you're doing well. I am excited to be here with you. Happy Thursday. Let's get started. Let's rock and roll, y'all. So here we go. Commercial giant predicts office market will return by 2025. You can't see that because I didn't change the screen. Way to go, Nev. Hold on. We got this. All right, there we go. This is much better. My gosh, it's going to be a day with technology today. I can see it. So I didn't necessarily highlight this one because I felt like everything was given right here, right? So what does that actually mean for you and I, and for people who want to potentially get into this, industry where they want to talk about, and they want to actually go in and, take on, uh, don't ask y'all. Um, what does it mean for folks that actually want to go in and buy a property? Well, it means that we are going to. It simply means that we're going to, be very, very patient. Have to be very patient when it comes to investing in office space, if that is something that you want to do. Right now everybody is fairly negative on the office space. I tend to be one of those negative people. I actually have been negative on retail and office space for quite a few years, as I believe that work from home would become more prevalent. I just didn't know necessarily that we would have, the beer overflow thing kind of happen to cause everybody to work from home. But I did believe that, folks would sort of shift in how they're doing business and how they're working and how we're hiring. So that means that, you can have the headquarters in New York City, but you can have vast majority of your employees in Ohio or Kansas or Texas or whatever, right? They didn't necessarily have to be local. But now we're seeing that that has shifted. And, as you can see, many offices are starting to shutter down. Many companies are rethinking the whole do we work from office. However, we do have one individual, as you saw, that was basically sharing that, yeah, the home is going to be, the new office. And there are also another places where they're talking about the fact that while that might be true, in order to entice people to come back to the office, you're going to have to do a whole lot of cleaning and a brand new design. So I think we can potentially see some of that stuff. And I think, office space might become more of a place to socialize and spend time versus, work full time. Now, that does not work for every business. For example, we saw that Ray Dalio, for example, has created these tents all over by his headquarters and is inviting traders to come in and work out of those tents because they're seeing that for traders, for example, JP Morgan said the same thing. For traders, for example, especially for the new ones, they tend to perform much better when they're working from the office because it's a highly competitive environment, right? So you have people really pushing you on, especially if you're a new trader. There's a lot more you need to learn because they don't really teach you much of the trading stuff in. Excuse me. Welcome to the live video. But they don't train you how to do trading and stuff in business schools, right? Like they don't. So a lot of the training you get it on the job, and it's hard to get training on the job when you're constantly working from home. So it's much easier to be in the midst of everything else and watch the seasoned traders and listen to how they're talking, how they're selling products, how they're thinking about what they need to get into, and really get that mentorship piece, which is the key component to success. So we saw that there's definitely needs for certain areas to work from the location, but there are many other areas that there is no need for that stuff. A lot of the stuff around programming and technology, all of that can be done from home. A lot of the administrative work can be done from home. A lot of the research, data and analysts, a lot of different positions that exist can be done from home, and that is where we're heading and where things are going to go. But now let's take a look at some of the residential stuff and what's going on. Yesterday we finished a video when I promised that I was going to talk about San Diego. So let's keep me honest and let's talk about San Diego and what's going on. So here you go. Home price increase outpaces the rest of California and much of nation. So what's going on in San Diego? Well, prices in San Diego metropolitan area were up 5.5% annually in July. It was the biggest gain for San Diego prices since April when prices surged 5.8%, its highest in nearly 2 years. Analysts continue to point to a lack of home for sale as one of the primary factors. Other factors include low mortgage interest rates and, of course, people wanting to have homes because they need a place to work from. And San Diego is absolutely beautiful. I mean, oh my gosh, if you've never been, it's absolutely gorgeous, beautiful weather around the clock, around the year, an ability to kind of do the indoor outdoor year round is really there. And of course, there's beaches and plenty of restaurants, and it's a gorgeous, gorgeous area. Most recently, I was in San Diego of October of last year, so almost a year ago, and it was just absolutely beautiful. It gets pretty chilly, at night and early mornings, but it gets beautiful, and you can still get into your shorts and t-shirt if you're like me that enjoys that stuff, and can be outside and just enjoy the beautiful weather. So the prices were up. Again, they're kind of looking at what's going on. And so they're saying prices are most up in Phoenix at 9.2% in a year, followed by Seattle at 7%, Charlotte at 5%. Chicago had the lowest gain of only 0.8%. And then Detroit has been basically taken off the list since March because there are delays in the recording office. So of course we will see everybody that kind of the full list of the top 20 cities in United States. The San Diego County median home price for resale single family home in July was $700,000, and that's according to CoreLogic data. So as you can see, it is not cheap to live in San Diego. It's very, very, very expensive, and yet the prices are still climbing on up. So here you go. Here's what we get to see of the top 20 metropolitan areas. It's actually 19 because the 20th, which is Detroit, as mentioned, does not have their processing office has delays, so they don't have information. So Phoenix is up 9.2, then Seattle is 7, Charlotte is 6, Tampa 5.9, Cleveland, San Diego is number 5, then followed by LA, Minneapolis, Portland, Oregon, Atlanta is at 4.8, then Boston, Denver, Washington, D.C., Miami, uh, Las Vegas at 3.3, Dallas at 3.2, San Francisco at 2.5, New York at 1.3, Chicago at 0.8, and of course Detroit, we don't have information. So as you can see, some of the areas that used to be like the hottest things that you can possibly get into, and everybody was clamoring to get into these cities, are the ones that are not so hot anymore. San Francisco, New York, and Chicago. So there you go. This is what's happening. And then, of course, nationwide, we are up 4.8%. This is pretty interesting to me if you really think about it, is that we do have some really cool information about where we are, what's going on with the market, and where people are heading. Now, talking about where people are heading, I'm trying to find where this is because I typically set it up in order, but today I had a different kind of order because I was trying to fix the video, which I'm still working on. So, anyways, but another area that folks are really jumping into is, drumroll, Puerto Rico. Oh, that's not the one. This is the one. Okay. So Puerto Rico is basically folks are just deciding to jump into it. Look how beautiful it was. I haven't been in Puerto Rico in years. Last time I was there was probably at the turn of the century. So that probably makes me very, very old. But I just remember that I had a grand old time and I really had enjoyed it. And I do hope to go to Puerto Rico one more time in the hopefully near future. Maybe not that near, but relatively speaking, near future. Sales of Puerto Rican luxury homes and condominiums are spiking. Buyers from New York, California, and other high tax states embracing the island's low tax status. Residents of the territory who must live there at least 183 days, basically 6 months, a year, say a Puerto Rico income tax of up to 33%, but no other federal or local income taxes. The A lot of individuals are also exempt from taxes on interest, dividends, and certain capital gains. So here's the part that makes living in Puerto Rico very, very interesting. That you're able to basically reduce your taxation. This is the reason why people are doing it, and if you are predominantly living off of interest, dividends, or capital gains, basically an investor, you are exempt from paying taxes whatsoever, and so you only pay taxes on other things up to 33%. And this is the reason why so many wealthy individuals are moving to Puerto Rico, because guess what? Most of them don't work for income, they work for assets, and then they actually make money this way. The blue highlight that I have on the screen that we just talked about. Now, while up to date residential sales figures for the island overall aren't available, developers of high end projects report brisk business in recent months. For example, one of the individuals was talking about the high hotel and residential project developer. Was saying that they made 34 sales of condominiums and home lots since basically March, and compares the same time period last year of only 20 sales during 2019, right? So it definitely is an increase. Average price of beachfront condo has increased to $1,360 a square foot from $1,000 a square foot. That's a very expensive foot, if you ask me. But this is just because they're talking about like high luxury and stuff. This is what they're focusing on here. There are less luxurious places that are still equally as beautiful and amazing in Puerto Rico to live in. And there are, you of course can have like the beachfront properties, there's the mountain properties, and there are definitely some challenges that Puerto Rico still has. One of the challenges is that, they were ravaged by a hurricane in, I want to say, 2017 maybe. They still haven't completely recovered from that stuff, but they're working on it. But with more people kind of flocking to it, especially wealthy individuals, there's definitely going to be a potential for more money to come to the area and to the territory, and of course, for that to be improved. Now, most of the sales were signed after the beer flow overflow has arrived, and buyers from mainland are seeking low taxes, while those from San Juan are seeking the open space and lower density. San Juan, of course, being the capital of Puerto Rico and probably the densiest of the locations, but there's definitely room to spread around and move about. And if you are interested, it is a U.S. territory. So you don't need a passport to travel there. You do need a driver's license, some sort of government photo issued government ID, just for you to get on the plane to get there. But you don't need, in case you're wondering, you don't need to have it. And do prepare that there will be a lot of Spanish happening in Puerto Rico. So do prepare for that. But people do speak English, so just don't be surprised when you go in. It feels like going to another country without a passport, because it really is kind of like going to another country without a passport. U.S. territory is also pressing hard to attract remote workers and businesses, so that those that don't necessarily have to worry about working from an office, they can work from home. And they're saying, hey, why are you working from where you are? Come to Puerto Rico and work from here. And that actually sounds lovely. So if you are not having to work from an office, and your office and your employer is very, very open to it, and San Diego maybe is too expensive at $700,000. Maybe $1,000 or $1,500 or 13 whatever a foot might be a bit more expensive. It still nonetheless could be an interesting place to go and find a place where you can potentially maybe rent or buy that is much less than that, and spend your summer in Puerto Rico, or your winter in Puerto Rico, actually, as a matter of fact. I am still very much actively involved with folks that need me on ground and stuff. But boy, would I love the opportunity to go and work in Puerto Rico for a few months. I think that would be fabulous. So hey, let me know if you are able to do it. Let me know in the chat. Let me know in the comments. I would love to be able to hear. Unfortunately, I'm kind of tied up at the moment in the location between Rhode Island and Vermont. I really don't have an option at this moment in time. But that could very easily change in the upcoming months, right? So everything is possible. Anything is possible. Now, what's going on with the mortgage payments and stuff? Where are we with this whole thing? Well, I do have good news for you that number of folks skipping mortgage payments is dropping to the lowest levels since April. Boy, this is super tiny and nobody can read this. So let's see if we could make this a bit bigger so that folks can actually see what's going on. Fewer Americans are in forbearance on the mortgage now than in any point in the last 5 months. Share of mortgages in forbearance dropped 6.93% as of September 13. Roughly 3.5 million homeowners are in forbearance plans. And this is actually really good because we've been monitoring this. This number used to be what? Roughly like 7, almost 8 million. And the number was going to climb. So the fact that we are down to 3.5 is really, really good news, personally speaking. Now, of course, would I prefer that we have nobody? Yes. Is that realistic? No. But 3.5 is better than 8, right? Or 7.9 or whatever it was. The forbearance rate is largely a reflection of improvements related to loans backed by Fannie Mae and Freddie Mac. And of course, this is the one that actually has dropped and keeps dropping. The number of homeowners with Federal Housing Administration (FHA) or Department of Veteran Affairs (VA) loans who are in forbearance has gone up. Additionally, the number of new requests for forbearance for Ginnie Mae backed loans also increased. So, this is an important thing to understand that we're seeing that Fannie Mae and Freddie Mac, which is typically your stronger borrowers, your stronger buyers, are actually getting out of whatever challenges that they have had, or just maybe opted to say, I'm not going to pay if I don't have to, so I'm just going to, put the pause on this and then catch up a little bit later on. So that's possibility. I know folks that were definitely doing that stuff. They decided, if I don't have to, I'm not going to. And then there were folks that were saying, I know I don't have to, but I still want to. So this is what we're seeing, that some of the folks that have had a stronger sort of approval piece are the ones that are getting out of it easier. Ginnie Mae loans, including FHA and VA mortgages, are more commonly originated for first-time home buyers. They tend to have lower credit scores and smaller down payments. Two-thirds of homeowners in forbearance have extended their forbearance arrangement, and of course we know that they can do that up to a year. How it's actually going to play out, well, we don't know that. We don't know exactly how it's going to play out until about I would say what, like April ish of 2021. This is the reason why I keep saying, I know folks are saying, oh, January comes and market is going to tumble, and I'm going, nah, probably not. It's possible, but probably not, because we would have to start seeing some signs now, and we are not necessarily seeing those signs quite yet. Here is another article that really drives home the point of the signs are just not there yet. And this one says that the sales of newly built home jumped to the highest level in 14 years in August, but builder supply dropped to just 3.3 months worth. Normal thing is a 6-month supply. This is sort of the balance component. And as you can see, we still have stronger demand than supply, which leads me to believe that the prices will continue to go on up. Probably not for forever, but for a while longer for sure. This situation is even worse in a market for existing homes, which is down nearly 19% annually to a 3-month supply. And every time we keep on doing this, the number keeps on dropping and dropping and dropping. So this is the part where I see the prices really being pushed on up, because everything is supply-demand combination. The majority of sellers are also buyers, so even a new listing hit the market, another buyer is also added. So that's an interesting component to think about, because typically if we're thinking of like a stock market, for example, you have a buyer and a seller, and if I'm just a seller, I'm not necessarily a buyer. But in real estate, if I am selling a home, especially if that's my primary residence, I'm also a buyer, because I also need to find another residence to actually get into. So that's an interesting component to pay attention to. Single family housing start rose nearly slightly in August, according to the census, about 12% annually, still lagging the current demand. So, this is we are basically still, we're kind of going on up with the housing starts, with the home builders, but it's still, lagging. We're still not meeting demand. It will meet it. It just takes time to do that. prices of existing homes are now soaring up double digits from a year ago. Median price of a newly built home sold in August was actually down about 4%. Lower price homes are in far higher demand, especially from millennials. All of the demand increase from homes in August came from the below 500,000 price point. Particularly those priced below $300,000 were in demand is the greatest. So this is an important thing. This is an incredibly important thing for us to understand that while the prices kind of keep on going up, there is a ceiling to it. And the reason I say there's a ceiling to it is because once certain people are sort of priced out of the market, they are priced out of the market. They can't get any more money. And unless lenders start doing some sort of crazy ninja loans like they did back in like '05, '06 into '07 and then down into the crash of '08, there's going to be a ceiling to this component. Basically, if you are looking to do some sort of flips and stuff, your goal then is to find properties that are going to be priced well below 300,000, even after the repair. So what you want to do is maybe find a home that is currently selling at 150 to 200. Then you can put in 30 to 50 grand, so that would bring you to 200 to 250, and then sell it at maybe 299 or 289, whatever, right? Like whatever the market is. We're talking sort of big picture thinking here. I don't know what market you're in. I don't even know if that's possible. San Diego, probably not. Good luck, right? But if you're not, this could be a potential. And then you can go in, list it at 299, and so now you're hitting this sweet spot, and the sweet spot seems to be below 300,000. And if you're able to, of course, pull it off. Now, the easiest way to get into some of the homes, obviously, you can go out with a realtor and just drive around, but there are also things called tax foreclosures or tax sales, tax deeds, that you can go in. Not every state has them, but a lot of states do have them, where you can go in, buy a property directly from the government at a deep discount. You don't know what you're going to find, but if you are into the flipping anyways and you have money to do it, you can actually buy something that is easily on the market at 300,000 for, I don't know, anywhere between 50 to 120 or 150,000. Put in some money, get it repaired, and then be able to flip it for an incredible return on your money. And so that's one of the strategies that exists out there in case you are interested in participating in it. Now, what's going on with the mortgages? Well, we're getting a little bit of the sort of things are maybe cooling down. So let's take a look at this stuff because here is the article. It says mortgage demand falls nearly 5% as interest rates set another record low. Now I have been kind of expecting that this was going to happen because remember, I can't refinance every 2 months. Like it doesn't work that way. So while I can go out and do certain things every 2 months with stocks or with crypto or with that kind of stuff, when it comes to mortgage, I can't really do it. And so if I have refinanced in say May, I can't do it again in September. I have to wait for some time because the cost to do it, cost benefit, just doesn't exist. I get dinged on my credit, which makes it harder to borrow, right? Not that I'm doing anything wrong, but they were like, oh, wait a minute, you are the risky borrower. Well, not necessarily, but that's how they set it up, right? So there's going to be a limit to this component because folks were doing it. And then, of course, as we start hitting into the colder months, people typically stop buying. So seasonally, it makes sense. We do see a drop in buyers when we start hitting towards the holidays. So we basically have another month, maybe 6 weeks of sort of the higher activity. And then we go into the natural sort of season. And that's why I call it seasonally adjusted because we do go into the dips. So let's read. Demand for refinancing and purchasing mortgages fell last week with total mortgage applications volume down 4.8% from the previous week. Average contract interest rate for 30-year fixed rate mortgage with conforming loan balance of up to $510,400 decreased to 3.05 for 3.10. So it's not a huge decrease, but it is a decrease. Application to refinance fell 7% for the week, although they are still up 50%, 52% from year ago. So this is not an alarming thing. This is a normal thing because there's just, like I said, there's only so many folks that want to refinance, that are interested in refinancing, that can afford to refinance. And then there's folks that are not interested, and those that have done it, they can't do it again. So this is the part that is going to get very, very interesting to kind of watch. And as I am, sort of thinking about the whole thing, I don't know if I'm right or not, but as I'm thinking about the whole thing, I'm thinking, there's going to be a point where the banks are going to want to lend even more money, and so I could see potentially where the mortgage rates, the interest rates, are going to drop, quite a bit over the upcoming months to try to entice more folks. So maybe those that were waiting are the smart ones that are going to get the absolute best rates. Now, I have, in full disclosure, I have actually refinanced one of the properties. The other one I'm actually waiting a little while longer to do it because I think I could get an even lower rate. The one that I actually got on the one that I have completed recently, I got a really, really good rate. I am beyond happy with it. But if it continues to go on down and we see well below 2%, and we see this, like, the ones. I know it sounds crazy, or even below one. I am definitely going to do it again, but that's going to be a little bit of time before we do that piece. So we'll see. We'll see how things are going to roll out. I'm definitely going to be watching on the whole thing, and I hope you will watch with me on Money Matters, and of course live only on onedealaway.com/live. Sorry, I had to plug it in. All right. Many lenders are still operating at full capacity and working through operational challenges, ultimately limiting the number of applications they're able to accept. Applications to purchase home fell 2% for the week and were 22% higher than a year ago. Again, still, we can see that we've had very, very strong demand, but we are seeing that things are starting to cool down just a little bit. So, this is kind of where we are and what's going on. We are, of course, going to continue with the show tomorrow. So for everybody watching this live, make sure you stay tuned in. Get ready for Q&A, which we're going to do in a moment. For everybody else watching this on, Facebook, YouTube, wherever else you find the stuff, or listening, because I keep saying listening and I yet to put it onto the podcast, but I will. Make sure you subscribe and make sure you tune in tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.